Welcome back to the Longacres Finance channel. It's that time of the month again, to select the best Dividend Aristocrats for the upcoming month using my 3 simple strategies. This is an exciting update, as next month will be the first month of the second year for this series. So in this episode, I'm excited to share the almost full 1-year results for these strategies. I'll go over the results for July, that have thus far been better than average, and we will dig deeper into these strategies. If you like Dividend Aristocrats, and you're interested to learn about a simple way of selecting individual aristocrats, keep listening. I'll kick things off with a brief update for July. I computed the partial returns for this month's selections through July 25th, and things are looking pretty promising. NOBL, the Dividend Aristocrat ETF from ProShares, is up 3.39%, which is a welcome sight after the fund posted its 4th worst return ever last month. The fund finished June with a loss of 6.73% and is down 12.31% for the first half of 2022. This is the worst first half of the year return for the fund since its inception in November of 2013. A 3.39% gain in July will bring the year-to-date loss back down to single digits, but 2022 is still trending as the worst year for NOBL since its inception. Okay, let's have a quick look at each of my 3 simple strategies in July. The 10 most undervalued aristocrats for this month are up 6.31%, which is 2.82% better than NOBL. The 10 fastest expected growth aristocrats are up 7.94%, which is 4.55% better than NOBL. And the 10 best blended aristocrats are up 7.45%, which is 4.06% better than NOBL. While this isn't the best return month for my strategies, it is equivalent to the high outperformance from December of 2021. The best way to implement any of these strategies is through a buy and hold portfolio, and those are not performing as well in July. They have returns ranging between 2.82% and 4.07%, with only one buy and hold portfolio beating NOBL this month. However, since inception, all 3 buy and hold portfolios are beating NOBL by at least 6% and SPY by at least 11%. Pretty solid outperformance during the first year for each of the 3 strategies. I can't wait to see what's in store for next year and beyond. Okay, let me now talk about how each strategy works, the results from the past year, and tell you which Dividend Aristocrats are chosen for next month. First up, we have the most undervalued strategy, and as the name suggests, the goal here is to find the 10 aristocrats that are currently the most undervalued. For valuation, I use dividend yield theory that is perfectly suited for companies like the Dividend Aristocrats because of their long streaks of steady and rising dividends. Dividend yield theory compares the current dividend yield to the trailing dividend yield to identify undervalued stocks. From the 10 chosen aristocrats for July, Lowe's is performing the best thus far, as it's up 11.52% through July 25th. In a not-so-distant second place, we have Franklin Resources with a 9.48% gain. Stanley Black & Decker rounds out the top 3 with a gain of 9.02%. VF Corporation is 4th with a gain of 7.49%. Ecolab is up 6.19% and rounds out the top 5. T. Rowe Price Group is up 5.83%. Clorox is up 4.82%. 3M Company is up 3.64%. Walgreens is up 2.24%. And Medtronic is up 1.87%. As you can see, 8 out of the 10 chosen aristocrats for July are doing better than NOBL this month. I know there are still a few trading days left this month, and things can change, but it's unlikely these 10 aristocrats will give up a 2.82% lead over NOBL. The buy and hold portfolio for this strategy is made up of 29 unique positions, as there has been quite some turnover amongst the most undervalued Dividend Aristocrats over the past 12 months. The buy and hold portfolio is very simple. Each month an equal amount is invested into all 10 chosen aristocrats for that month. The positions are never sold, and all dividends are reinvested right back into the issuing stock. This portfolio is up only 2.82% in July, as some of the previously chosen aristocrats are not doing so great this month. However, the results of this strategy cannot be measured by one single month. The portfolio has beaten NOBL for 4 out of the 7 months this year, but if we look at the year-to-date return, NOBL is down 9.34%, while this portfolio has a loss of only 1.47%. The reason for this large difference is that when the portfolio loses to NOBL, that loss is small, and when it beats NOBL, the gap is usually pretty large. Since inception, which was August 1st of 2021, so almost a full year right now, this portfolio has beaten NOBL by 10.86%. And compared to SPY, the S&P 500 ETF, the portfolio has generated alpha of 16.2%. That is quite a big win for the strategy in its first year. Honestly, I was expecting the strategy to start off slow and offer alpha down the road. I'm a bit surprised by how well it performed during the first year. Granted, it's been a very interesting past 12 months in the stock market, to say the least. While I'm not expecting such strong outperformance to continue next year and beyond, I would expect to see this portfolio continue to generate alpha over NOBL. The 10 most undervalued Dividend Aristocrats right now that I am selecting for the month of August are Franklin Resources, Clorox, Ecolab, Lowe's, Medtronic, 3M Company, Stanley Black & Decker, T. Rowe Price Group, VF Corporation, and Walgreens, which are exactly the same 10 aristocrats that were chosen for July. Even though they are performing very nicely this month, they still present the best opportunity from a valuation standpoint. The potential undervaluations range from -17% for Ecolab to -37% for T. Rowe Price Group. The average undervaluation for all 10 is -26.84%. The average dividend yield for these Dividend Aristocrats is 3.46%, which is significantly higher than NOBL's current dividend yield. Strategy number 2 is the fastest expected growth strategy. And as the name suggests, here I try to figure out which Dividend Aristocrats will grow faster than the rest. To do this, I compute an expected return forecast for the next 5 years for each aristocrat. The reason I use a 5-year time period is because it's really difficult to estimate where a given stock will be a few months or even a year from now. But over a 5-year period, its total return should follow its earnings growth, and the potential for reversion to the mean is much greater. My return forecast is computed as follows. I take the current dividend yield, plus a return to fair valuation based on dividend yield theory, plus a discounted 5 years earning forecast. Next, I annualize the 5-year total return to give me a forecasted annual rate of return for each aristocrat. And I select the 10 aristocrats with the highest return forecast for inclusion in this portfolio. The 10 chosen aristocrats for July using this strategy are performing better than the most undervalued aristocrats. Collectively, they are up 7.94%, which is more than double the return of NOBL. The best performing pick is Nucor with a gain of 17.08%. In a distant second place, we have Lowe's with an 11.52% gain. And right behind them we have Target with a gain of 11.51%. Albemarle is up 9.08%. Stanley Black & Decker is up 9.02%. VF Corporation is up 7.49%. T. Rowe Price Group is up 5.83%. Cisco is up 4.3%. Medtronic is up 1.87%. And Caterpillar is performing the worst with a gain of 1.71%. You probably noticed that both strategies have a lot of overlap, which is what I typically notice with these strategies. Oftentimes, the most undervalued aristocrats are also poised for the best future returns, but not all of them. The buy and hold portfolio for this strategy is doing well in July, with a gain of 4.07%. Not as great as the 10 chosen aristocrats, but nevertheless beating NOBL for the month. If this outperformance can hold out for the remainder of the month, this will be the third winning month this year. However, even though this buy and hold portfolio has underperformed NOBL for 4 out of the 7 months this year, on a year-to-date basis, it is still beating NOBL. The portfolio has a loss of 8.1% this year, compared to a loss of 9.34% for NOBL. Since inception, this strategy is beating NOBL by 6% and SPY by 11.33%. It's not performing as well as the most undervalued strategy, but it's still offering ample alpha over NOBL. This strategy should perform better in a bull market, so it'll be interesting to see if it'll catch the most undervalued portfolio once the market flips and we start seeing more green than red days. The 10 aristocrats that are poised for the fastest growth right now are Albemarle, Air Products and Chemicals, Chevron, Medtronic, Nucor, Cisco, Target, T. Rowe Price Group, VF Corporation, and ExxonMobil. So we have 3 changes from the prior month. Caterpillar, Lowe's, and Stanley Black & Decker are replaced by Air Products and Chemicals, Chevron, and Exxon. Of the 3 new aristocrats this month, only Air Products and Chemicals looks to be potentially undervalued. But nonetheless, the 2 oil giants look attractive based on future prospects, even with the potential overvaluation right now. The average forecasted return for all 10 aristocrats is 23.94%, with Cisco having the highest forecast of 39%, and Exxon having the lowest forecast of 15%. These forecasts are not meant to be interpreted literally. These are just assumptions, and it's unlikely that they will be very accurate measures of future returns. What I am betting on is that aristocrats with higher return forecasts will perform better than the ones with lower forecasts. Thus far it has worked out well, but there is no guarantee these results will continue. The average dividend yield offered by the August selections is 2.82%, which is considerably lower than the most undervalued strategy. But the focus here is on total return and not a high starting dividend yield. The third and final strategy is called the blended strategy, because it's a blend of the first 2. Here I look for the fastest expected growth aristocrats, but only amongst the potentially undervalued aristocrats. The selections for July are performing very well, with a collective gain of 7.45%, also offering more than double the return of NOBL this month. The best pick for July has been Sherwin-Williams with a gain of 15.68%. In second place we have Lowe's with a gain of 11.52%. In third is Target with a gain of 11.51%. Then Stanley Black & Decker with a gain of 9.02%. VF Corporation with a gain of 7.49%. Ecolab with a gain of 6.19%. T. Rowe Price Group with a gain of 5.83%. 3M Company with a gain of 3.64%. Medtronic with a gain of 1.87%. And Caterpillar with a gain of 1.71%. Again, a lot of overlap from the other 2 strategies, but there is a bit of uniqueness to each approach. The buy and hold portfolio for this strategy is up 2.95% in July, so it's trading NOBL by a little bit. This year it has beaten NOBL for 4 out of 7 months, but it's doing far better on a year-to-date basis with a loss of 6.11%, compared to a loss of 9.34% for NOBL. Since inception, this portfolio has beaten NOBL by 7.77% and SPY by 13.11%. Again, a very solid first year for this strategy. The 10 chosen aristocrats for the blended strategy for August are Air Products and Chemicals, Ecolab, IBM, Lowe's, Medtronic, 3M Company, PPG Industries, Target, T. Rowe Price Group, and VF Corporation. Similar to the last strategy, here we see 3 changes for the month of August. Caterpillar, Sherwin-Williams, and Stanley Black & Decker make way for Air Products and Chemicals, IBM, and PPG Industries. All chosen aristocrats are undervalued, since that is one of the conditions for this strategy, with an average undervaluation being 20.79%. If you recall, the most undervalued picks were 26.84% undervalued. The blended strategy usually has a slightly worse average undervaluation. It also usually offers a lower starting dividend yield as compared to the most undervalued strategy. This month, the average starting dividend yield is 3.16%, which is still pretty good in my book. I track all of the Dividend Aristocrats in a Google spreadsheet that is shared with my Patreon community. They have the option to look at the spreadsheet anytime they want to see the most current valuations and return forecasts that are automatically updated by Google. It's been fun tracking these strategies for a full year now, and I hope they will continue to produce strong results in the future as well. I know that there will be periods of worse performance, like there have been in the past, but in the long run, I believe these strategies will prove that they have merit. If you enjoyed the video, please give it a like and subscribe to the channel. Thank you for watching and see you next time.